Hello everyone. This is another great video about index funds versus ETF versus mutual funds. Those names are familiar for a lot of people that get used to them, but some other people they're not familiar with those terms. Index funds versus ETF versus mutual fund. Let's start with mutual fund. Many people may ask, what is a mutual fund? A mutual fund is a company that pulls money from many investors and invests the money in securities such as stocks, bonds, money market instruments, and real estate, and also other assets like short-term debt, etc., etc. That's a mutual fund. The price of a mutual fund is referred to as net asset value. They call it NAV, NAV, per share, sometimes expressed as NAVPS. There is a fund for nearly every type of investor or investment approach. Okay, there is a fund for everything. There is a mutual fund for everything you can imagine on the planet Earth. One thing I just want to tell you, not all mutual fund, not all ETF, exchange traded fund, not all index fund, and vice versa is the same. When you're talking about mutual fund, there is open-end fund and closed-end fund. An open-end fund provides investors an easy, low-cost way to pull money and purchase a diversified portfolio, reflecting a specific investment objective. That's an open-end fund. So when you're purchasing fund, you have to know if you purchase it open-end fund or closed-end fund. A closed-end fund is a diversified portfolio, also where the professional money manager pull investor money that can issue as unlimited number of shares. The fund sponsors sell shares directly to investors and redeem them as well. That's open-end fund. These shares are priced daily. Yes, mutual funds are priced daily based on their current net asset value. Some mutual funds, hedge funds, exchange traded funds, they're like what type? I can say that the type open-end funds. Yeah, some of them they're just mutual fund, hedge funds, and exchange traded fund ETF. Are types of open-end funds. Closed-end funds launch through an initial public offering. Usually not everyone can purchase the closed-end funds and sell on the open market. IPO closed-end funds launch to an initial public offering, IPO, and they sell it on the open market. The closed-end fund shares trade on exchange and are more liquid. Yeah. Their price trades at a discount or premium to NAV, which is net asset value, based on supply and demand throughout the trading day. We're talking about the closing the closed-end fund. Now, index fund versus ETF versus mutual fund. Index fund versus ETF. Both index funds and ETF basically aim to track a specific market and are usually not not actively managed. Yes, certainly. ETF and index fund, they track a specific market and they are not actively managed. Unlike most mutual funds, meaning that they don't have high fees associated with them, since a manager isn't as actively involved like they involve in a regular mutual fund, active mutual fund. We can say those ones, they are passive investment. However, index funds like mutual funds tend to have pretty high investment minimum, meaning that they can be quite prohibitive for novice investors who don't have loads of starting capital, or you can say a lot of money. And but that's not always the case. There are certain ways that you can purchase index fund for very little money, and you are going to know that. I would say, secondly, ETF trade like stocks. This means that investor can trade shares throughout the day. Yeah, during the entire market day, an investor can buy and sell ETF. While index funds only trade once a day after the market close. So there is a little bit less flexibility for buying or selling shares when we come to index funds. You know, the thing about ETF is that it's easier to get a mix of stocks, bonds, or other assets with them. You can even buy gold ETF, commodity ETF, real estate ETF, precious metal ETF, oil and gas ETF. They come in different flavors. ETF are also famously low-cost investment because they don't need to be managed. The fees associated with them are less than with mutual fund. Index fund versus mutual fund. Technically, an index fund is a type of mutual fund, but that's where the similarity basically ends. The main difference between an index fund and an actively managed mutual fund that the fund manager charge of a mutual fund fees. You got a lot of fees, a lot of charges, a lot of commissions. Fund actively try to outperform because the fund manager usually try to outperform the market by regularly rebalancing the portfolio, selling and buying assets, and reinvesting in different sectors that they believe have the potential for above average growth. And also, we have another fund which is not for everybody. We have hedge fund. Hedge fund, you can say that this is for wealthy individual. Yes, because first they're not advertised. Hedge fund. Investing a portion of your portfolio in hedge funds is one item. Hedge funds require certain conditions to invest in. Hedge funds are designed to make money regardless of the market condition. Investing in a full weather fund is another idea we can talk about. And I'm going to talk further about the hedge fund because there is certain information that people need to know about the hedge fund, and I'm going to bring you this information specifically for hedge fund. If maybe you might be able to invest in hedge funds, maybe you might be qualified to invest in a hedge fund. You don't know how. I'm going to tell you how and what products usually the hedge fund companies invest in. I'm going to let you know that. Also, you got private equity fund. Private equity fund, when you invest in private equity fund, you are investing in a fund managed by a private equity firm, company. And usually those funds, PE, they call it PE, private equity fund, is a long-term investment because your money can close your money for maybe 2, 3, 4, 5, even 10 years. Similar to mutual fund or hedge fund, private equity fund is a pool of investment vehicle where the advisor pulls together the money invested in the fund by all investors and uses that money to make investment on behalf of the fund company. We call it PE, private equity fund. I got more information for you. The person who will bring you this information, my name is Anthony Janti. I'm a real estate agent in the state of Florida, particularly in the South Florida area. Got question about real estate, and whether you want to buy or someone want to buy, or someone want to sell a property, or want to invest in a real estate property, someone want to rent a property, you can call me 305-784-6554. And also you can visit my website byhumarket.blogspot.com. The blog is byhumarket.blogspot.com. AnthonyRealEstate.blogspot.com. Vision1realestate.blogspot.com. worldclassrealestate.blogspot.com. Those blogs, they have very great information on them. So I suggest people who are watching this video to visit this blog. We're talking about private equity fund. Who can invest in PE? Private equity fund typically open only to accredited investors and qualified clients. They are not available for everybody. Accredited investors and qualified clients include institutional investors such as insurance companies, I would say the big and financial institutions, university endowments, pension funds, high income net worth individuals. So unfortunately, they are not for everyone. I suggest you also to visit knowledgefinancialgroup.com, and this website got great information on it, or facebook.com/knowledgefinancial or knowledgefinancial.blogspot.com. We are also on Twitter, twitter.com/financial school. Just visit us for more great information. Before I can continue with that great video, there is something they call generational wealth. And you can build wealth, and when you live in this planet Earth, you can live part of your wealth or your entire wealth for your loved one, your families, or to your church, your charity. But in order to do that, you have to be able, or you have to know how to invest in something somehow, somewhere. And some people usually say that I don't know where to invest. I usually say to them, you don't know where to invest, just invest in an index fund or an ETF, which is exchange traded fund. And buy NASDAQ index fund or NASDAQ ETF. Buy funds from the developed markets or emerging markets. And buy fund from Switzerland index fund, the 20 biggest company. Buy FTSE and from London stock market, FTSE 100. Buy this index fund. Buy CAC 40 from France market index fund, the 40 biggest company. Buy TSX 60, that's Canada 60 biggest company. Buy DAX 40, which is the German 40 biggest company. When you purchase those kind of index fund, you will just have peace of mind. You don't need to worry about rebalancing portfolio. You don't need to worry about the market goes bad, skyrocket. Because market always goes up, always go down. We will make money anyway, no matter what, for generational wealth. And this information, I believe, is useful. I believe is very instructive, very educative for people who are watching this video. My name is Anthony Jonty, real estate agent in the state of Florida, particularly in South Florida area. If you need real estate, please give me a call. 7205-784-6554, or visit my website or visit my blog. And Bahia Market Enterprise, bahiamarket.blogspot.com, youtube.com/Bahia We are everywhere. Thank you for watching. Thank you for listening to that video. May God continue to bless you. As always, see you the next time for the next video. Thank you.